the best of Money Matters.
Market View on Money FM 89.3.
That's right, you're tuning in to Money FM 89.3. Time now for Market View with me, Chua Tian Tian, where we take you through how the Singapore stock market closed for the day, the biggest movers, sectors, and of course the companies to watch. But as always, a quick recap of some key movements. While Singapore shares rose as investors continue to mull uncertainties relating to global trade. So if you look at the Straits Times Index, it was up 0.48% at 4,051 points at 2:30 p.m. Singapore time, and that is with a value turnover of some 956 million Sing dollars seen in the broader market. Now let's take you through the closing numbers. As we shared with you earlier, the STI closed in the green as well, up 0.4% at 4,047 points. In terms of value turnover, we are looking at 1.67 billion Sing dollars. Now gainers outnumbered losers 321 versus 197. Top advances for today, we've got for you SGX, ASUS and ST Engineering. And top decliners, we have GMHUSD, HBL and First Sponsor. Now, in terms of counters to watch, we have Singapore Airlines because the national carrier said yesterday that its proposed joint venture with Malaysia Airlines had received conditional approval from the Competition and Consumer Commission of Singapore. Now, elsewhere from how investors are reacting to US President Donald Trump's tariff letters to 14 countries, to movements in Australian dollar after the Reserve Bank of Australia held its cash rate in a surprise move, we've got more international headlines in focus. And joining me on the line today is Kelvin Wong, Senior Analyst at OANDA. Kelvin, welcome to the show.
Hi, thank you for the invitation.
Great to have you. And Kelvin, let's start with Asia this time around. I mean, Trump had hit trading partners, a number of them from Southeast Asia, with steep tariff rates. Now, he sent tariff letters to 14 countries, I believe, and they include players like Malaysia, facing a tariff rate of 25%, Indonesia, facing a rate of 32%, Thailand, 36%, Cambodia, 36% as well, and Laos, 40%. Outside of Southeast Asia, we are looking at Japan and South Korea facing a rate of 25%. How far have investors priced in the news if we look at movements in Asian equity markets? I mean, fairly positive, would you say?
Yes, precisely. So if you look at the general price movement in Asia, stock market today is more of a risk on rather than a risk off sentiment. So the focus will be on the possibility of further extending the extended 1st of August deadline as being dictated by the U.S. White House yesterday. So market participants right now are actually looking in the lens that whatever Trump's that is actually issuing this kind of hardball rhetoric tactic, eventually at the end of the day, this double-digit 20+ of tariffs, as per stated in those 14 tariffs letter, there could be a potential probability that it will tone down, and that actually kind of being priced into the risk on sentiment today.
I see. And Kelvin, going back to the Singapore stock market as usual,
Yes.
How did the STI fare today, and any surprises if we look at the biggest movers and of course the sectors that they lie in?
Sure. So if you look at the STI from today's perspective in terms of the price performance, and as well as 1.5 weeks ago, our STI has been one of the, I would say, in fact, the stellar top performer versus the major Asia Pacific stock indices that's inclusive of the Japan Nikkei 225 and the Hong Kong Hang Seng indices. So today, I think for the third consecutive session, the STI managed to scale another fresh all-time high today. And one thing interesting over here is that we do have several component stocks that are more defensive in nature, with the likes of Sembcorp Industrial, which is considered as a defensive stock, and as well as ST Engineering. And today, leaders for sure is related more to news flow that are more sector and stock-based centric, like SIA and as well as SGX.
Okay. And let's talk about SIA first before going on to SGX. SIA said yesterday that its proposed JV with Malaysia Airlines received a conditional approval from the Competition and Consumer Commission of Singapore. I know that you don't comment on individual companies, but generally speaking, what would a JV between carriers in the region mean given the current state of the travel industry?
Yes, so if you look at from a longer term perspective, given that we know that trade tariffs between U.S. and its trading partners will not go down to zero. So it will be only hovering. The best case scenario will be what some countries will be at 10%, 15%. Worst case scenario, 20%. So overall, we would potentially start to see global growth temper off as compared to a few years ago. So that eventually will lead to lower tourism, lower global travel. So what I could actually emphasize over here is that there could be much more partnership between like-minded aircraft carriers with the like of Malaysia and Singapore. So that actually is being priced in as a pooling of resources and increase of efficiency between such airline carriers.
Okay. Now, if you're just tuning in, we're in conversation with Kelvin Wong, Senior Analyst at OANDA. Well, going now to SGX, Kelvin, one of the companies to watch for today because Singapore's equities markets got its biggest IPO of an S-REIT in over a decade. And that is, of course, as NTT DC REIT yesterday launched its IPO and listed over, get this, 1 billion units on the main board to raise gross proceeds of some 773 million USD. What do you think is the outlook for the local boss? I mean, can we expect more listings and more vibrancy going forward?
Maybe let me touch on the vibrancy first. So
Okay.
We know that in the past 3-4 years, everyone totally write off the Singapore exchange after that lack of growth and technology IPO, where money flows have started to flow into countries that actually has this managed to capture such growth and technology start companies and IPOs, the likes of Hong Kong and even mostly US. So right now, I would say that Singapore is very fortunate in the right time and the right place, given the economic climate right now. So over the years, we have been pretty much known for a stable and defensive stock market as a whole, primarily focusing on income-generating equities like the REITs. So this time around, we have this biggest entity REITs being listed on the exchange, SGX. So that definitely will be a kind of a positive inflow from local institutional investors as well as foreign investors as well, both on the local and institutional space. And do not forget, we managed to actually capitalize on this future growth story about artificial intelligence. And given the fact that this entity DC REIT is more primarily focused on data centers, and we know that data centers is actually one of this component that is pretty much essential to drive further AI growth. So going forward, I do believe that the vibrancy of the Singapore market will still be pretty much intact given the current state of economic environment that we are in right now, more of a defensive nature rather than a offensive nature. So at least from a medium-term perspective, the SGX potentially could actually set to ride on or capitalize in this current economic condition climate.
Okay. And across the region, Kelvin, we must look at Australia because the Reserve Bank of Australia, RBA, today left its cash rate steady at 3.85%, which is a shock for markets, given how participants they had confidently wagered on a cut. Now, the RBA said the majority of the board wanted to wait for more information to confirm that inflation was slowing. How would you read into the news and how have investors reacted if we look at movements in the Aussie dollar versus the greenback?
So if you look at, for sure, there's actually a big shock for the FX traders because most of the FX traders are expecting one interest rate cut today or the second consecutive interest rate cut, a back-to-back one, to bring the policy rate down lower. So for sure, definitely it was actually a positive, we call it a news flow event for the Aussie dollar after having this so-called pullback that has shaped yesterday. So the Aussie dollar is now trading back above like 65 figure level above its 20-day moving average. So the key thing over here is if you look at the trend of inflation in Australia, it's actually tricking downwards towards RBA target of 2% or so in the last quarter, and even on the monthly CPI indicator. So the key thing about RBA over here is that it seems to me that they are actually pretty much uncertain on how the tariff implementation will turn out at this juncture. And also, do not forget, there are also various knock-on effects that impacted Australia's major trading partners like China. So I do believe that they are actually erring more on the cautious side of the story to wait and see, rather than actually putting an end to its interest rate cut cycle. But you know that in FX market, everything is relative. And based on the policy and as well as the current White House administration that is advocating right now, tax bill, physical spending plans, those are in the longer term deemed detrimental to the US dollar. So I do believe that given this pause on the interest rate cut cycle by RBA, potentially in the short term, we may see a further strengthening of the Aussie dollar.
I see. And in that case, if I may stretch my earlier question, Kelvin, what are the levels then to watch for the Aussie dollar, maybe against the greenback or against the SGD?
Okay, so against the greenback, the next level we are talking about for a very near term will be the 66-figure psychological level, that is 0.66. Then thereafter, there will be a major resistance coming in at 0.67 against the greenback. Okay,
I see. Now, Kelvin, let's end off with more news out of Asia. China's Shenzhen Stock Exchange has reportedly urged brokers to speed up applications for companies to list on the, you call it the China Export, as officials seek to boost private enterprise and reignite the economy under threat from rising tariffs. What do you make of the latest move, and what does it mean for China's equity markets then?
Okay, well, I would say that, number one, it's still too early to tell whether would that lead on to a positive feedback for such startup companies. So still reminding that China's company is usually those small, medium enterprises where cash net inflow is pretty much uncertain. And whether the key thing is we got to see what will be the take-up rate like for such IPO. Would there be a potential oversubscription or undersubscription? So that's too early to tell. And one thing I believe that it's more of a strategic move by the central government to actually urge such potential high growth startups to actually speed up their listing plan, given the fact that we are now have some more of a grace period between US and China. Don't forget during the Geneva trade, we call it a breakthrough or the trade, the so-called truce. They agreed to actually lower down tariffs for both sides. So things have started to turn better for the local China stock market. So in fact, if you look at today, the CSI 300 is actually up by 1% and hit a fresh 5-day high. So I do reckon that regulators in China is actually urging the startup to actually, this could be a good window opportunity to raise some funds. So it's more of a tactically driven kind of business decision. Whether we lead to a long-term positive sentiment is too early to tell.
I see. Lots to watch as usual. Thanks so much for the insights today, Kelvin. That was Kelvin Wong, Senior Analyst at OANDA. Thank you so much for joining us on Money FM 89.3.
Before acting on the information on Money FM, please consider if it's suitable for your own investment objectives, financial situation, and risk tolerance.